Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of June 10th to June 14th, 2024. Let's dive into what to expect in the upcoming week. This week, financial markets will focus on the interest rate decisions and economic data releases from major central banks around the world. The policy moves by the Federal Reserve, Bank of England, and Bank of Japan, along with economic data from Australia and China, are set to have profound impacts on the markets. Let's explore how these key events will shape the future economic landscape. With U.S. inflation resuming its downward trend in April, and the ISM manufacturing PMI for May falling short of expectations, investors are increasingly convinced that the Federal Reserve will lower interest rates at some point this year. Currently, market expectations are for nearly two-quarter-point reductions by December, with an 80% probability for the first cut to occur in September. Consequently, as investors try to pinpoint when the Fed will begin its rate-cutting cycle, they are likely to focus on next Wednesday's FOMC decision. This upcoming meeting is particularly significant as it will include updated economic projections and a new dot plot. The U.S. CPI data for May are due to be released just a couple of hours ahead of the Fed's decision, and a set of persistently high numbers could allow dollar bulls to start the party early, even if the Fed's decision does not meet their expectations. After all, market participants will be aware that the CPI numbers will not be incorporated into policymakers' projections. That said, Fed Chair Powell may receive questions about the data at the press conference. The PPI figures are scheduled for Thursday. The BOJ will take the central bank spotlight on Friday, maintaining its benchmark rate between 0% and 0.1%. Despite raising inflation forecasts, it did not signal reduced bond purchases or imminent rate hikes. The yen slid after two interventions, with a larger-than-expected Q1 economic contraction adding hurdles. Investors see a 67% chance for a 10 BPS hike in July, but if the BOJ does not clearly communicate this, the yen may continue to fall. The pound may be influenced next week by the UK's employment report and GDP data. The hotter-than-expected inflation figures in April prompted investors to lower their BOE rate cut expectations. Currently, they anticipate around 40 BPS of rate cuts by December, with a 65% probability of a first to 5 BPS cut in September. Elevated wage growth and solid GDP data could reduce the likelihood of a September cut, supporting the pound's rise. Despite weaker-than-expected Q1 GDP data, the RBA is still considered one of the most hawkish central banks, with only a 50% chance of a rate cut this year. A rebound in employment data and hotter-than-expected Chinese inflation may boost the Aussie as investors become more confident that the RBA will not cut rates this year. This week's global economic events will provide crucial policy signals for investors. The Federal Reserve may gradually adjust rates amidst declining inflation trends, while UK economic data might influence the Bank of England's rate expectations. Meanwhile, the Bank of Japan's rating decision will impact the yen's trajectory, and Australia's economic data will determine the RBA's policy direction. Together, these events will shape the future market dynamics and investment strategies. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.